Here, there we are. Good afternoon. Can everyone hear me? A little bit. Do you think?
You might have to be a little closer.
Yeah. Is that a little, that's better. Okay, great. Good afternoon. Today, we are going to be presenting a workshop on historic preservation tax credits. But before we start, I wanted to take a little bit of time to introduce who's here. First, we would like to thank Megan Harvey and Tom Stugemeyer from Main Street Wadsworth for sponsoring the workshop. Our goal today is to provide a simple overview of a rather complex program. We're not going to dive too deep into intricate details, but we want to provide enough information for you to understand if this is right for your project. We'll have some time at the end for questions and answers, and we also have a handout that is available afterwards, which covers information. And then we have also made the slides available to Megan and to the city. First of all, I want to introduce our firm, Perspectus. Perspectus is a full-service, Cleveland-based architectural firm. We have 45 employees and 27 accredited architects. We work in historic preservation, and we're focused in other varied markets. Our firm's goal is to provide design-forward solutions with reliability, cooperation, and communication from start to finish. Today, we will be presenting, Lauren and I, the tax credit workshop. And let me give you a little bit of information on Lauren. She is a principal with our historic studio, and she is a nationally recognized leader in the field of historic preservation. She has been the past chair of the American Institute of Architects Historic Resources Committee, and she was part of the advisory group for the state of Ohio that established the historic tax credit application process in early 2000s. Lauren is going to cover the second half of the workshop and also introduce 3 case studies. My name is Polly Bloom, and I'm a consulting preservation specialist. I work in architectural and historic research and writing, including National Register of Historic Place nominations, and I consult with clients on state and federal historic tax credit applications. I worked with the Perspectus team for the recently listed Wadsworth Downtown Historic District. Before we start into the slides, I just wanted to do a little bit of housekeeping. If you could hold your questions till the end, I think it will help us stay on time. So let me start with just giving a brief explanation of what are historic tax credits. They basically are state and federal programs which offer tax credits against state and federal taxes. And these provide incentives for the appropriate rehabilitation of certified historic buildings. These two partner together, and they basically offer adequate incentives for the preservation of historic buildings. And I want to talk a little bit about the context of why historic tax credits exist here in the United States. It actually goes back to 1816, when at Independence Hall in Philadelphia, a group of people realized it was at threat of being torn down. And so that was some of the very first recorded historic preservation in the United States. Now, let's fast forward to 1966. It was then that the National Trust for Historic Preservation published a report called With Heritage So Rich. It was a provocative document which illustrated what had been lost with American architectural heritage. This was the time of urban renewal. And so the federal historic tax program essentially started in the 1960s, and Ohio's historic tax credit program started in about 2007. And actually, Ohio is one of the top states awarding historic preservation tax credits. So we are in the right spot. Next, I'm going to talk about who administers the historic preservation tax program. And as we move through the slides, we're going to try to split it between state and federal to make it simpler because they're two separate applications. So basically, the state tax credit program is a combined effort of Ohio state offices and federal agencies. The National Park Service and the State Historic Preservation Office work together to make sure that projects are in compliance with the Secretary of the Interior's standards for rehabilitation, which are some common sense guidelines of how to approach rehabilitation. And then just for reference, the National Park Service is actually an agency of the U.S. Department of Interior. The State Historic Preservation Office and the National Park Service then work in conjunction with the Ohio Department of Development, which awards the Ohio tax credits. And what they do is a competitive cost-benefit analysis, making sure that the project has good economic development and use of dollars, and that it's going to be a net revenue gain at the state and local level for taxes. And I'm going to stop and provide a definition of what we call QREs, because we're going to reference QREs in the next slides. That is qualified rehabilitation expenses. And the simplest explanation is that this includes common construction materials and labor that would be associated with a rehabilitation project. And so that's the construction cost. It also can include the fees for developers, engineers, consultants, accountants, lawyers. And then it does not include the cost of the building or expanding or enlarging the building or building new construction. And it also does not include lease-up cost or expenditures for things like parking lots, sidewalks, and landscaping. So the next few slides, what we're going to try to do is simplify to help you understand what qualifications are required at the state and at the federal level for these applications. So first of all, in our first column, we have certified listed, and you'll see the shape of the state of Ohio and then the United States below that. And in Ohio, the building must be certified as a historic property. And that means that it could be already listed on the National Register of Historic Places or part of a district, or in the case of communities that are CLGs, which are certified local governments, they can actually nominate buildings as certified historic buildings or create their own districts. So in the state of Ohio, that will make you qualified. And at the federal level, it does require that a building is listed on the National Register of Historic Places or is part of a district for the National Register of Historic Places, or that if it's not one of those two, that it is certified to be accepted into that within 30 months. For both the state and federal, the properties need to be income producing. This means it can't be a single family resident, but it can be things like an apartment building or a duplex. It could be a commercial or industrial building, a retail store, or a theater. Examples of buildings that generate income. The next qualification is that it's substantial test. At the state level, this applies to a category that we call the small project category, and it must meet the substantial test, which is simply to say that the value of the property minus the land is going to exceed the project cost. And at the federal level, it does need to meet the substantial test for all sizes of projects. And then the last qualification is what we mentioned earlier, is that all projects must meet the Secretary of Interior standards. And just relative to Wadsworth, here, because there is a National Register Historic District, if any of those buildings are contributing buildings to the district, they already qualify. And what I'm going to go over next is how Ohio awards their historic tax credit dollars. In Ohio, each year, the legislature approves 60 million of awards which can be allocated for historic tax credits. And it falls into three categories: for small, intermediate, and what they call general. A lot of people call this large. So the first 8% goes to the small, 25% to the intermediate, and the remainder to the general. And if you're a small project, your qualified rehabilitation expenses are less than 1.25 million. If you're in the intermediate, let's see. If you're in the intermediate, it's 1.25 to 10. And if you're above, would you like me just to stop? Since
Trying to figure out why it's dropped off.
Do we need to jiggle the mouse periodically?
yeah. There we go. So just to start over, for the small projects, the qualified rehabilitation expenses should be less than 1.25 million. For the intermediate projects, they qualify if they're 1 to 10 million. And then the large or general projects are qualified rehabilitation expenses over 10 million. When you're applying for the Ohio tax credit and you're a small project, you can ask for a maximum tax credit of up to $250,000. In the intermediate, you can ask for up to $2 million to cover the qualified rehabilitation expenses. And in the large category, you can request from $2 to $5 million. And I just wanted to mention on the last slide, if the state of Ohio does not allocate all 60 million in a round, it will transfer it over to the next round. So if they awarded 55 million, they have it's because it's 2 rounds. If they awarded 25 million, they have 5 million left. They will award 35 million in the next round. Some other considerations that an owner or qualified leasee needs to consider is, in the state of Ohio, you do need to be an owner or qualified leasee, and the same applies for the federal. In Ohio, it is a competitive process. That means that not everybody who applies can get a tax award. So it is competitive, and it's a scored process. At the federal level, it is not a scored process. You can apply anytime. It's 20%. And as long as you meet the other qualifications, you will be able to apply this tax credit. For the state of Ohio, the application is 2 times a year. And there's also qualified lease rules, which we have seen have changed occasionally, and this is a consideration that we suggest you talk with your tax advisor, but it applies to how nonprofits can apply for tax credits and how they have to have like an income entity. And at the federal level, the entity must be income producing when leasing to nonprofits. And then in terms of the limits of credit that could be requested, in the state of Ohio, you can request up to a maximum of 25% of the qualified rehabilitation expenses. And in the national level, it's 20%. So if you have qualified rehabilitation expenses of $100,000 and you qualify for both, you are awarded at the state and you qualify for the federal, you can take 45% of those qualified rehabilitation expenses as a tax credit. In the state of Ohio, the maximum that you can get for a tax credit is $5 million. And in the federal level, there is no maximum, which can be very beneficial. The minimum of qualified rehabilitation expenses for the state of Ohio, there is no minimum, but at the federal level, the qualified rehabilitation expenses must be greater than the adjusted basis of the property, which once again is basically the overall value of the property minus the land, which is essentially the building. And I am going to turn it over to Lauren.
So I'm going to go through the process with you. Polly looked at some of the rules and requirements, but I'm going to take a look at the schedule and the whole process, comparing both Ohio and the federal tax credit application. You don't need to worry about this. This is particular slide is in your handout, so you'll get a copy of this. You can have a copy of this. So on the top, we have Ohio, which, as Polly mentioned, is a competitive application. It is scored. Ohio Department of Development accepts applications 2 times per year, and they have particular deadlines of March 31st and September 30th for the financial package, but you must have your what's called your Part 1 and Part 2 done submitted at least 30 days prior to that. So kind of working backwards from those deadlines, we like to recommend that people start really planning their application at least 30 to 90 days ahead of time, and that is gathering up all the information that you're going to need for the application. These programs are meant to work together, so the first part of the application is actually either the same document, and it is the federal application, and Ohio reviews it both at the state level and the federal level. So the first thing you would need to do is submit what's called an intent to apply, and you are assigned a reviewer at the State Historic Preservation Office to work with. You have a preliminary meeting with them, and they review your project for making sure that it is a certified historic structure. That's the Part 1. And then they also review the work that you are proposing to do to your project, to make sure that it meets the Secretary of Interior standards, and that's called the Part 2. So the first thing we do is really the federal application, and it's reviewed both at the state level and the federal level prior to submitting for the Ohio credit, which is the competitive credit. So that first part is done by the State Historic Preservation Office. It's really a single application if you're doing the applying for both tax credits. Once you have that submitted, the next phase is to submit for the Ohio application. That's an online application, and it's administered by the Department of Development, the Ohio Department of Development. You can have an optional meeting with them to help review your application before you submit it and get some advice, but that's not required. And then your application is submitted online by either, depending on which round you're in, either by September 30th, oh, there it goes, or March 1st. Oh, we're on. I'm just going to go back one slide. So that is the looking at the financials and the cost-benefit analysis and all the information you're showing, because Ohio really wants to see that your project is going to move forward. They are assigning these credits, they're allocating this fund, and they want to make sure they're allocating it to projects that are ready to move forward. All of that takes about 4 months between the time you apply for your Part 1 and Part 2, submit your online application. They will, both the State Historic Preservation Office and the Department of Development may come back and ask questions, give you time to clarify things. So that whole process takes about 4 months. This is for the, I'm going to go back. I don't know. Thank you for shaking jiggling the mouse. So essentially, they will award for each round by June 30th and by December 31st. The federal review only takes about 60 days. Typically, if everything goes smoothly, it can take a little longer, but like Polly said, it's not competitive, so as long as you meet the standards or meet the criteria, you'll get the award. So those are the two. Then you may elect to do a 2-year single-phase project or a 24-month project. That is pretty common in Ohio because in the scoring of competitive application, it scores higher to do a single-phase project. But there might be reasons why you might want to do a 60-month phased project, and that is because you can start claiming the credit once your expenditures have exceeded the adjusted basis. So you have an option of 2 years to 60 months to get your project done. When you are complete, you file what's called the Part 3 or the certification application. It's reviewed to make sure that you did what you said you were going to do, and then you get your certificate when you file your taxes, and I'll talk a little bit about claiming the credit in the upcoming slide here. So here's claiming the credit. So it's issued when you get a certificate. It's issued when the project is complete. You've submitted your Part 3 certification application. It's been reviewed and found to be, in agreement with what you originally proposed as your project. Ohio requires that you submit photos. You submit proof of the owner who is claiming it, that you identify any other investors that are going to be claiming a credit, and they want to see third-party, if it's a larger project, they want to see third-party accounting of your expenditures, and then they'll certify your credit. For the federal side, you just submit photos, your Part 3 certification application. It's reviewed. You may have to correct some things if they find that something's missed. You may have to file an amendment, but essentially, those the certification takes anywhere from 30 to 90 days, and then you get your certification. Then you take that certification, file your tax return, and in Ohio, a credit in excess of taxes owed is paid as a refund check. So I've had clients who had a $250,000 tax credit. They owed $30,000 in taxes that year in Ohio, and they received a check for the balance. So it comes back to you. That is one of the reasons these are often paired together, is because that is a taxable event on the federal side. So it's really nice to have the federal credit to offset that sudden large income showing. On the federal side, the credits are claimed against taxes owed. It is a 20% tax credit, but it is taken 4% a year for 5 years at a minimum, but it can also be spread out over a period of up to 20 years in order to claim that credit. And just to kind of go through the competitive Ohio credit, some of the things that you have to have in place for a successful competitive application, a good business plan, a solid budget, really knowing what your expenditures are, what your design is. Your ownership structure really established and correctly set up to take advantage of the tax credit. They want to see projects that already have their financing secured. You get the most points for having your project fully financed, showing that you're ready to start your project if you got awarded. They also want to see local support from your city, your county. They will give you points if there is a financial commitment from your local community. The standard is 3% of the remaining investment to complete the project. So that can be loans, grants, tax abatement, donations, tax increment financing, all of those facade grants, those kinds of things. And then again, you need to have your construction scheduled outlined because they give you more points for completing the project in a single phase of 2 years than a 60-month project, although that is an option. And a lot of people want to see examples of how to apply those Secretary of Interior standards, and I think the best way to do it is to really look at some projects. So Prospectus has worked on dozens of projects as both architects and tax credit consultants. So just a few of them, and I'm going to talk specifically about 3 in Cuyahoga Falls because I think they're kind of a nice size scale. These are all fall into that small project category, so they're under $1.2 million. This is the Falls Stamping and Welding Building. It was built about 1918. And to kind of talk a little bit about the standards that we apply, there are 10 very common sense rules, guidelines. You can kind of distill them down to don't damage the building, don't create a false sense of history, and repair rather than replace any of the historic features. So nobody's going to make you keep your old furnace, but they would like you to keep your historic windows if possible, because they are a character-defining feature. So for this building, the 2 before photos are on the left, and the 2 after photos are on the right. Behind the plywood, we did have the original historic windows on the front and this side elevation. On the back, they were too damaged for us to restore them, so we ended up replacing them with matching units. But the rest of the windows were restored. Obviously, the original 1918 garage door was missing. We had this kind of coiling roll-up door, which was not the correct historic door, but we had one historic image, so we based our new design on that historic image. We didn't make something up that wasn't correct. We used what evidence we had. On the interior, historically, it was a big manufacturing space. So it was a big, wide, open space. And that's a character-defining feature is that it's a large, open space. So this was adaptively reused for offices. And it was a advertising company, marketing company. So they did a lot of work in common. They used the big open space. They had open desks. Then their private offices are kind of those little boxes tucked off to the side, but there's a lot of glass, so you see a lot of you get a sense of the full scale of the space, even though we have some smaller spaces within, and they're built as kind of a box within a box. So that's all of the ways that we were looking at this project to meet the standards. And then this is also in Cuyahoga Falls. This is the Wayne Agency building. It was built as a single building in 2 pieces with a party wall between the 2 halves. And at some point in time in its history, half of it got sold off, and the new owner put this cedar shingle elevation on it. And the owner applied for what's called a pipeline grant through the Department of Development, and that enabled them to hire a contractor to remove that shingle facade. and find out that we still had a lot of the brickwork. We were missing the windows, but we knew what the historic windows looked like because we still had to. So the two on the left were restored, and the two on the right are replica windows that were milled locally. Just a little bit of masonry repair. We did not have any of the historic storefronts, but we did know what they looked like. We had quite a bit of historic photos. The storefronts were rebuilt in modern materials. They're standard aluminum storefronts. We just set them up in a similar configuration as they would be historically. They're considered compatible, even though they're in very modern materials. And this one is the Alhambra building, which is also in Cuyahoga Falls. And this building was built about 1912, and it was built as a neoclassical facade. But in about 1940, they took that off, and they built this international-style modern facade on it that you see on the right as restored. We didn't have the 1912 to go back to, but the period of significance for the district included 1940, so we were able to kind of work with what we had. The upper image on the left is it got a third facade. In 1970s, they put kind of a screen on the upper floor with, it was built of metal, steel I-beams, and clay tile pipe. It was very strange. So that was taken off using a pipeline grant. And we found we still had most of the 1940s facade. So it was restored using photos from the 1940s. To create that character of a 1940s building, new windows based on the historic photographs. The building originally had a material called vitrolite. It's actually a glass on the storefront level on the first floor. That's really not available as a manufactured product today. So we used a glossy finish fiber cement board, essentially siding, glossy siding. And then the storefronts were missing. So just using historic photos. One too far. Just using historic photos, just tried to put modern storefronts in that were in a similar configuration as they would have been historically. So they have a base, they have a recessed entry, they have butt glazing at the corners where there's no frame, and using just historic photos to guide a contemporary interpretation of what would have been there historically. And then I'm going to turn this back over to Polly.
Hopefully they'll stay up.
I'll go move the cursor around.
So in ending our presentation, and before we open up for question and answer, we just wanted to talk about how Wadsworth is positioned for historic tax credits. You are well positioned. You have a national historic district. It contains quite a few buildings, 49 contributing buildings. This blue outline shows from North Main down to South Main, the area of the district. And within that, the buildings, there's also a contributing site, which is the Broad Street median, which used to be the ending point for the streetcars. And then there's a contributing structure. On the Ohio Injector site, there's a beautiful historic water tower. And as Lauren was alluding to with Cuyahoga Falls, when projects are started, you're going to look at your building and if it might have some of the historic features covered, you're going to look at the period of significance to decide at what point you're going to take it. And with Wadsworth's period of significance being very wide from 1863 to 1967, over a 100-year period, that gives you a tremendous amount of flexibility for the period that you want to present the building. So overall, Wadsworth is in a very good position, and some of the hard work, having the district already nominated, has been taken care of for you. So with that, we're going to put up a slide that has a QR code. so that if you want to get more information, you can just scan this. And then we wanted to open it up for questions and answers. And I guess because this is being recorded, I'll try to repeat the question that anyone has. No questions. Oh, okay. Yes.
So on one of the slides, it talked about the maximum amount of dollars. Is that the maximum amount of dollars for a project, a year, or the lifetime of the property?
So the question was to give, thank you, to give an idea of the maximum credit. The federal credit is unlimited. It is 20% of the qualified rehabilitation expenditures, and there is no limit. Ohio has a maximum credit per project of $5 million, and you can elect to have a 2-year measuring window, and that doesn't mean you have to finish the project in 2 years. It means the bulk of your expenditures is happening in that 2-year window as a single phase. Or you can elect a 60-month phased project in which at the time of application, you're going to outline all your phases. And so your measuring window where you're doing the bulk of the measuring is 5 years. We have had projects that went on for 12 years. That can happen. It's works with a phased project. I mentioned briefly that with a phased project, so we have that rule that it has to be they call it the substantial test. So your project has to cost more than the value of the building without the land. That's the substantial test. Ohio only applies the substantial test on small projects. For the federal, it applies to every project. So what can happen in a 60-month project, and the reason people do a phased project is if they have a very large project and they want to spread it out over 5 years, and year one, they're going to spend more than that adjusted basis. So phase, say the building's worth $250,000, and they're going to spend $3 million. They're going to do $1 million a year for 3 years. Once you exceed that $250,000 value, that year you can file an interim application, and Ohio allows this as well. You can file that interim application and start claiming the credit on taxes the first year you exceed the adjusted basis. Is that clear? I know that's a somewhat complicated thing. The reason so many projects don't elect 60 months is because Ohio awards more points, substantially more points, 4 more points on a 100-point scale for projects that are going to get done faster in 24 months, because I want to see buildings occupied, residents in buildings, businesses in buildings, revenue, tax revenue generated. They want to see projects move forward, so they give a higher value to 2-year projects, single phase. Yes?
Another slide, you had that in the state of Ohio, they'll cut you a check.
Yes.
What limits that check value? The taxes you pay, the value of what you invested, refund check.
It is a refund. So for just using some simple math for examples, if you had a $1 million project, your tax credit is 25%, so $250,000. You complete your project, you file your taxes, your tax return, you owe $20,000, you're going to get a check, a refund check back from the state of Ohio for $230,000. So instead of the way the federal does it, where you can spread the taxes out, or you have to spread it out over 5 years, you can spread it out over 20 years to start claiming your credit. Ohio just gives you a refund, and once you file it, you're done. Now, when you get that $230,000, that's now taxable as federal income. So that's why so many of the projects always work together. Yes.
I have a question. If, maybe like at a 1,000-foot level, is there any scenario where you are you always better off to apply for state and federal both? By applying for state, that helps you on your federal as well, so there's no scenario where you really want it with a major project, whether you'll want to do one or just the other, correct?
So the question was, is there, I'm going to summarize it, is there any situation where you would do one and not the other? So 90% of the projects we work on, they're together, state and federal applications, because they're designed to go together, they're meant to go together. The only exceptions we've had for that is we had a nonprofit that had a for-profit entity. They owned the building, and just the way their legal and accounting was set up, they decided not to do the federal tax credit because they just wanted to keep their legal structure simple. So they only did the Ohio credit only. They did not pursue the federal credit. The other situation that we are now seeing, and it's more common more recently, is the low-income housing tax credit, which is a completely different program, is aligned to work very well with the federal historic tax credit, but it cannot be used with the Ohio credit. So sometimes if people are using low-income housing tax credit and they want to use historic tax credits, they only do the federal and they don't do the state. So those are the only two times I've seen that happen, but for the most part, they're always done together. Yes, sir.
So, is there a negative, for instance, if the state, as I understand it, is rating it, you're scoring, do you get negative points because you're also going for federal money?
The question was, do you get any negative, is there anything negative about the competitive Ohio application that would be affected by also applying for the federal? And no, they're actually intended to go together. And one of the things Ohio does is they want to see that you can fully finance your project. And they credit you from the start for the Ohio credit and the federal credit. So if you're applying for the Ohio and federal credit together as a combined application, they already consider you being 45% funded. So you're trying just to make up the 55% gap, because they know every project can get bridge financing if they have been awarded the credit. So they automatically give you that. So there is an advantage there. Yes, in the front row.
If you're applying for multiple properties, do you apply under one or do you apply separately?
So the question was, if you're applying for multiple properties, do you apply for one or do you apply separately? The federal application will require you to file each single building separately. The Ohio credit allows you to file them together. So when we showed the Wayne Agency building, the one with the shaker right there. So for the Ohio credit, this was one application. For the federal credit, we had to do everything twice because there's a property line. This building was built on two separate parcels, and there's a firewall between them, and at one time they were separated, even though they were built together by the same owner. The federal reviewer said, you got to separate these. So, and that, the reason for that is there's what's called a recapture rule for the federal side. They want you to maintain the property We didn't talk about the recapture rule, but they want you to maintain the property as restored for 5 years, and that includes changes to the building and ownership. And that's one of the reasons why they just do 4% a year for 5 years as your credit, because if at some, and there's nobody policing this, but at some point, say year 3, you decide you need to sell the building, you're just not going to claim those last 2 years of credit. On the Ohio side, there's no recapture period. You get your credit, and if you sell it the next day, that's fine. But that's one of the reasons they made you, because it would tie up your buildings. You wouldn't be able to, sell them together or sell them separately. So that's why that rule exists. Yes? Go ahead.
What way does your firm help us go through this process?
So we are architects, so we can do design, engineering, planning, all of that. And then as well, we assist with the application process. So for a lot of our clients, we write there, if they're not already designated, which here in Wadsworth, you've got a National Register district, so you have a very large area of buildings that are already contributing, already listed. But Polly in our office does most of the National Register nomination writing, along with a couple other people on the team. And then, so we help through that process. And then we help with both the federal and the state application. The state application requires a lot more owner involvement, because you're getting your pro forma together, your business plan. We're not doing that part, but we help everybody through that application process.
Is there a fee to do that?
Yes.
You guys charge to do that?
We do charge to do that.
Okay. And what are the fees for us?
It really depends on scale. Like for a small project, those fees for the application are probably going to be about 1.5%, something like that, of the project for a small one. For bigger projects, that might go down, but for small projects, that's generally where we are. And it depends on whether or not we have to nominate the building for the National Register, how difficult a nomination it is, how much research we have to do. There's a lot of factors, but that gives you a ballpark. Now that's going to be on TV. I just told all my competition what my fees are. But that gives you a rough idea. I think that's all our questions, I guess. Thank you all very much. We really appreciate you coming out, and you have our contact information.